Welcome to my YouTube channel, AttaX Trading Hub. And on this video, this will be my first ever educative video from beginners section, right? Because I'm currently on a journey to unlock secrets of a successful trading, right from being a beginner to an experienced trader. My goal is to provide you with insights and knowledge that will make you a successful, profitable trader. Let's get started. This video, we are going to be talking more about the market structure for the beginners, and also if you're an experienced trader watching this, you can just take some of your time to scroll through and refresh whatever you've learned before, because I might also say some things in which you might be new to. So why not grab your popcorn while we move on to what today's topic is all about. So talking about the market structure, first of all, what is market structure? As a trader, you're supposed to know everything that has to do with the market structure so that you can actually scale through in whatsoever strategy you're trading. Market structure is the nature of competition between the buyers and the sellers, upwards or downwards movement of price. That is to tell you that actually we all know what structure is. Structure is actually an organized pattern of a particular thing. So when we talk about market structure, we are actually talking about the whole market intentionally. We have types of market structure, which is the basic and the advanced structure. And then what we are going to be discussing today is the basic market structure. And then on the next video, we will talk more and dive into the advanced structure of the markets. So what are the types of this basic market structure? We have the uptrend, we have the downtrend, and we have consolidation, right? So this is an example of an uptrend. We have price moves in an upward direction. So we also have the consolidation, which is price also moving in no specific direction, just creating series of highs and series of low. And on this particular trading condition, it is advisable to stay away from the market, because you don't want to start trading and the market takes you out because you have no specific direction of what you're actually trading into. So when the market tends to consolidate, you allowed, or you're supposed to give the market space to distribute price, or to give you a specific direction of where the market is heading to, for you to dive into trading the direction. So this is also an example of the downtrend, markets creating series of highs and lows. So okay, how do we identify if we are actually on a uptrend, a downtrend, or we are actually on a consolidation? So right here we are talking about identification of an uptrend, a downtrend, and how to identify a consolidation. The uptrend consists of the following, which is the higher low, the higher highs, higher low, higher highs. So when markets tends to create higher low and higher highs, that is to say that we are in an uptrend, right? So when markets tends to create a higher low, which is this, a higher high, a higher low, a higher high, a higher low, a higher high, that is to tell you that the market is currently on an uptrend. And then when we come down to the downtrend uses the lower high and the lower low. So to identify if you're on an uptrend or a downtrend, you have to know if the price of market is either creating a lower high, a lower low, or higher highs and higher lows. So when the market creates higher highs and higher lows, that's to tell you that the market is currently on an uptrend. That's the market is creating higher lows and higher highs. That's this is your higher high, this is your higher high, this is your higher low. So when price tends to come back to your higher low, you want to like look for buys. That's you want to look to buy the market to clear these higher highs to create another higher high, and then when the market comes back you're looking for buys. And then same thing as the sales. When the market creates lower highs and lower low, when the market creates a lower low, what you want to do is to look for an entry at the lower high and take your entry, and then you sell down to another lower low. Same thing at the uptrend. When market creates a higher low and a higher high, you always want to wait for markets to come back to your last higher low, and then you look for buys to create another new higher high. So let's talk about consolidation. Now I said consolidation is when price makes, or when the markets, let's use the markets in terms, when the market tends to create series of highs and low without any specific movement. So this is how consolidation looks like. Market clears this high and then go clears this low, then go upward, clears this high, go, market keep on ranging without no specific direction. Okay guys, let's go over to the chart example. Okay, this is the Euro USD chart, and I already labeled them according to the trend. And as we can see over here, we had the downtrend, which was creating series of lower highs, lower lows, lower highs, lower low, lower high, lower lows, lower high. All right, so you can see that this trend in the whole is the downtrend. So how do you identify a downtrend and an uptrend? So a downtrend is when price creates series of lower lows and lower highs, as we can see over here. And then an uptrend is when price creates series of higher lows, higher highs, higher lows and higher highs, higher lows and higher highs. So when you see price creates such kind of trend, all you want to do is to wait for price to come over to your last higher lows. Then you want to buy from there to buy into creating a new higher high, which is over here. And then you can see as markets created a new higher low, created a new higher high, higher low, same as the downtrend. So, and as you can see, the market came from a downtrend, and then we broke the last lower high of the downtrend, which gives us a new higher high of an uptrend. But this higher high isn't confirmed yet because we aren't sure yet if we are still going on a downtrend, right? So as you can see, the market created a new, okay, let's just say if this was a new lower high, then we would have expected the market or price to create a new lower low, telling us that we are still currently on a downtrend. But as you can see, market did not create a new lower low. Markets ended up creating a new higher low, and then we broke structure, which was the last higher high, and we also created a new higher high. That's telling you that the market has started a new trend, which is the uptrend, right? So, and all we can just do is to wait for the price to come down to the last higher low, and then we buy from there, creating a new higher high. So this is for the uptrend. This is for the uptrend, and then this is for the downtrend. This is for the uptrend, and this is for the downtrend. So let's go over to a chart with consolidation. That's an example of consolidation on a chart. so you would see for yourself. Okay guys, I just saw this chart on Euro USD, and I had to circle I had to circle it out, and you can see that this is an example of a consolidation. You can see what price did here. Price started creating series of highs and lows without any specific movement. You can see that this, you can't call this an uptrend and you can't call it a downtrend, because it's not creating higher highs and higher lows, and it's not creating lower lows and lower highs, right? So that is when you can call this price action of the market a consolidating market. Yeah, some people also call it accumulation. Yeah, and some people call it a ranging market. Yeah, it all depends on so many terms of what you want to call it. But I personally, I call it a consolidation because it's a ranging market and it creates series of highs and low without any specific movement. So on our next video, we are going to be talking more on the advanced structure of the market, and also make sure you subscribe to my YouTube channel and make sure my notification is turned on so you get to know when I post the next video. Make sure you are also trading with the best broker XNext. You can sign up with the link on the description below. They are the best broker. They have the fast withdrawal, raw spread, and unlimited leverage. Thank you guys, and see you on the next video.